Schedule C, other expenses you can deduct. Come in, relax with income tax 2020. Schedule C, other expenses you can deduct. Schedule C and the sole proprietorship with regards to our income tax formula will typically be in the top line item, the income line item, noting that we do have a separate schedule, that being the Schedule C, which has income and expenses on it. The bottom line, in essence, the net income of the Schedule C flowing into the top line of our income tax formula, where we then apply out the above the line, below the line deductions to get on down to that taxable income. We're going to be considering here other type of expenses, other categories of expenses that we haven't touched on prior to this. Note the general rule here, the general rule being that if it's going to be something that we consume that was necessary for the business in order for us to generate income, ordinary and necessary being the terminology, then you would think we would be able to deduct it. And that would be a common sense type of rule, considering we have an income tax. And with the income tax, we shouldn't just be taxing the top line of something like business expenses, but rather the bottom line, because the top line is the income could be very different from business to business, depending on what expenses we needed to expend in order to generate the revenue. So it would make sense from a business standpoint to be able to deduct those expenses necessary for the generation of then income. Remember that as we think about the Schedule C with regards to the tax return and the 1040, the first page of the 1040 here, we can have many different items that will be affected by the Schedule C. For example, this line item here is coming from the Schedule C to Schedule 1 to the first page of the 1040. That's basically kind of like the net income of the Schedule C, bottom line of the Schedule C. We have half of the self-employment tax then being an above the line deduction here. We have the adjusted gross income, and we could also have a qualified business income deduction up top. So the Schedule C has many different impacts on the tax return. Here's an example of the Schedule C. We have the income and expenses down below. Now note that as a general rule, we can look, of course, at the categorizations for the expenses in the expenses column to see common categorizations for many different types of businesses. So you might, obviously glance at the Schedule C or go over the deductions on the Schedule C or the expense categories and make sure that those things have been applicable. Now, typically when you're doing the bookkeeping for a business, then hopefully the bookkeeping is being done as you go. And that would be done with software, hopefully, like QuickBooks or something like that would be a good way to be able to do it. And then anything that's going to be business related then should be hopefully included, and you have basically an income statement at the point in time that you are creating the tax return. So note that as you do that, if you use software and you use kind of like the default categories in terms of the categorizations, then they will probably line up fairly closely to what we have here in the Schedule C, and we can kind of line them up. If someone made their income statement from scratch without preset categorizations for normal businesses, then they might use terminology that will be different than what is on the Schedule C. But note, whether it be here because it's the terminology is different, or whether it's something that's not normal for all businesses, it's unique or specific to a particular industry or particular type of business. If it's ordinary and necessary, then you would think it would be something that would most likely be deductible unless there was some kind of exception to that rule. So that's going to be kind of the idea of we'll look here for the expenses. If you have your income statement from a practical data inputs point of view, then you might look at your income statement and see whether those line items line up to items on the Schedule C in the expenses area. And then be able to allocate your expenses there, knowing that if they don't line up to one of these line items and they are still ordinary and necessary, you're simply going to put them into the other expenses down below and list out those expenses to the business. Now remember that although the 2020 Schedule C is out, and we'll look at the 2020 Schedule C with regards to the forms and the software, the 2019 instructions for the Schedule C and the tax guide for small businesses, the instructions often are not out yet. They're based on the 2019 thus far. So we're going to take the 2019 information and adjust it where we can or where we see fit for 2020. But just remember, the baseline of this information is from 2019. You could take a look at the instructions for the Schedule C as well as the tax guide for small businesses, and the 2020 information should be out shortly. You can find that then on the IRS website at irs.gov, irs.gov. So you also may be able to deduct the following expenses. So here's just some normal categorizations. Many of them should be fairly self-explanatory, but you just want to make sure that these are things that should be considered if you're putting together or building the income statement on which you'll be creating the tax return. But hopefully also when you're doing just basically the bookkeeping process, you're thinking ordinary and necessary expenses when you do the bookkeeping, and hopefully you're not doing the tax return basically at the end of the year if possible. You'd like to be doing the bookkeeping as you go throughout the years, and it really does help if you're using some kind of software, because the software can help to guide you through the process, and it will also make you use like a double entry accounting system, which is going to make it a little bit more accurate, as well as bank reconciliations, which really make it a lot more accurate. So advertising, if we had advertising expenses, of course, that'd be ordinary and necessary in order to generate the revenue. We spent the advertising, or at least that's why we're hoping that that's, generated revenue for us. So it's ordinary and necessary. Bank fees, obviously the bank fees that you have that are going to be related to the business. Hopefully, ideally we would like to have a separate business account than the personal account. And then all the bank fees that are on the business account, then you would think would be deductible. Dues to business organizations, education expenses. Now note, when you're thinking education expenses, you're typically thinking of those that you need in order to, for your current business. If they're education expenses that are going to set you up for a separate type of business or some other career, then you may not be able to deduct them on this Schedule C, but you may be able to get some other tax benefits some other place, such as if you're paying for college tuition, then your first thought is probably going to be for the credits that you might be able to take, and then if that doesn't apply, then the deductions. But typically the credits would be the first place to go. Impairment related expenses, so any expenses related to impairments, interview expense allowances, licenses, and regulatory fees. So obviously if you have any regulatory fees that are related to the business, we talked about basically state taxes. Those are kind of like state taxes. They can call them fees if they want, but they're going to be state fees that you might have. So those are going to be ordinary and necessary. So moving machinery. So if you're going to be moving the machinery, then that might be something that you can expense. Notice you can contrast that to when you first move in the machinery. That's probably going to be capitalized as part of the purchase. But if you have the machinery in place and then you are moving it from one location to the other, then that would most likely be an expense. Outplaced services and contractors are things that will typically be deductible. Notice if you're thinking about contractors and things like that, people that you're paying to do some type of service, you want to think about whether or not you want to make sure that there's a contractor relationship as opposed to an employee relationship, and make sure you have that distinction between an employee and a contractor, and then see about whether or not you may need to be issuing a 1099 to the contractor as well. Penalties and fines you pay for late performance or non-performance of a contract. So these are penalties and fines during the normal, course of business related to the contract. Remember that that's different than penalties related to the IRS. If the IRS penalizes for late payment or something like that, you may not be able to deduct the penalties. You may be able to deduct the interest related to it. Repairs and maintenance to real or tangible personal property. So remember that the repairs are something that you can typically deduct if you're improving something to the point that you're changing its performance or something like that, or extending its useful life. Then you may have to capitalize it at that point. So there's going to be that kind of distinction of when something is going to be categorized as an expense. For taxes, that would typically be better, because then you would get to expense it in that year. If you capitalize it, if you have to capitalize it and then depreciate it, then you might be more likely to having to take the depreciation over the useful life or an extended period rather than at this point in time. Repayment of income. So repayment of income, subscriptions to trade or professional publications. So if you have subscriptions to professional publications that, again, are in your field, then you would think you're keeping up. That'd be kind of like your educational expenses that you'd be keeping up with. And utilities. So obviously utilities on, if you're renting a place or if you have a place specific to the business that you're either buying or renting, then the utilities, if that's fully for business, would obviously be a deductible area. Obviously, if the utilities are on the home, and then you got to think about the home office kind of deduction, but you want to make sure that if that is the case, then you want to think about the home office deduction, right? If you're doing your business from home and you're thinking about, the place that you're working, then that's of course the home office, which could include utilities and rent, or part of, it depends if you own the home or if you're renting the home and so on. We may take a look at that in future presentations.